following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing well. We are broadcasting from North Carolina, as usual. And we got a big webinar tomorrow night, guys. November 12th. Have it at 6 p.m. You can get signed up on the TFNN website on the homepage. Please feel free to do so. I think we're going to have a good time. Very informative. And we have a new version of the scanner that's going to be out to everyone signing up. Get the upgrades. You guys are going to thoroughly enjoy that. Let me get my camera straight here. Okay. Why is my light? How's the lighting? It's a little off this morning. I will get that fixed. Here we go. We're going to start initially. Let me see if I can turn this off. Okay. I wanted to show the scanner in the background. Let me do that here really quick. Okay. Technical difficulties this morning. Let's take a look at the S&Ps. We're going to just start off with this because this is one that's been, obviously a head scratcher as it sold off. We got into that 2063 area. Now we're coming up into another little bit of a resistance point. We talked about a situation where we could be the buy the dippers on this based on the long-term breadth. That's still the case in my opinion. There's no new long-term signs to really start changing the tone here on this particular product. You've got 2063 sitting here that has held. And we're also coming up into 2086.87 that we talked about was the next target up on the long term. This is our daily. This is the weekly. Not a lot of signs here to start getting off the gas pedal on the long side, really, when you get opportunities on the support side. On the short-term situation, man, on the short-term situation, here's the 240s. Now you're above a box on the 240s. Had a little bit of a breakdown the other day below 2086.87. 2079, 2080 now is support on the short term. We've hit that and actually retested it this morning. And here's the situation on the 60s. So again, I'm not paying attention too much to the short-term inflection points right now. We broke down below that 2083 the other day, and we talked about next stop down was 63, and that was a chance to really step in and buy this thing based on the breadth. But, what's in store for it in the future right now? I think we have to wait. We've got a good bounce here. We've got about, 25 points that it's rallied off of 63. Let me just check where the high is. Actually 24 points off of that number. But remember, we're hitting now. Let me just blow this up. We're hitting now in the S&Ps a little bit of a resistance area. And, how do you take this? This is completely to be taken as a profit-taking situation. I think you've got to wait and see now. Short-term guys can look at this as a little bit of a chance to short against that particular POC on a box that's a little bit more wider than normal on our daily. Long-term guys, I think you just got to stay the course, keep the stops in below 2063. And I fully believe we can get to 2104 and even higher on this product. As nonsensical as that may seem, fundamentally speaking, to some of you guys, we're going to keep turning the wrench the same way until we're told differently here. All right. So as we move forward, we're just going to hit a couple of things that are of interest to me personally. The euro, no new changes there. I'm pulling up the 240. I just want to pull up the daily. There's a situation there. The weekly, as you know, 109, that big number that we closed below last week. But let's take a look at the 240s. And I want you guys to see how powerful this actually is. You know, we always talk about, you know, what's the level of resistance to keep selling this. Yesterday we talked about, you know, new box appearing, new resistance areas to sell. Case in point, this particular area, 107, 1077, 1.0772. All right. And, you know, what was the high? 1.0773. All right. So when we look at these short-term numbers and the trend is down and the 240 and the daily are kind of regulating that particular trend, we want to take advantage of these things when they're offered. Now we're at the bottom of a profile, going to have a little bit of, you know, profit taking opportunities for short-term guys here, but the long-term trend is still down. And where do you put your stops in on the long-term trend? I think now, considering that there's no new information on the daily, long-term guys would have to say, okay, well, maybe when I have a hint of a new box appearing, then I can start taking some weight off on the short side and reassess things based on new long-term inflection points on the daily. That's the case, really. I don't see any reason to take this trade off on the short side at all. And it's actually acting extremely well relative to the dollar, which it comprises, and we're going to hit that really quick. I mean, the dollar is not, you know, significantly rallying as the euro, as you can see here. Dollar not making new highs as the euro is making new lows. That's very bearish for the euro in general on a relative weakness side. So, you know, here's the dollar. Where I think this is headed. Again, if you guys have been watching the show, you know I'm a 128.29 guy on this. But I want you to see, you know, we talked about taking some weight off around 99.56 and just kind of waiting patiently till we had a kind of a move back up. This is our daily POC. Long-term guys, I really don't see a lot of reasons to take this off. And I'm saying this based on no new profiles attempting to appear on our intermediate daily, which is relative to that weekly. I've said a lot there. If you guys, you know, don't watch this show regularly, I'm probably speaking French here, but the webinar, hopefully tomorrow night, if you guys get signed up, is going to be, in my opinion, a catch-all for questions and any ambiguities that are out there about some of the information that we use. And we're going to be completely, hopefully, covering all the angles of the scanner. And that relates to some of these things that we're talking about on the charts here, 100%. So let's keep covering some of the usual suspects before the first segment. Japanese yen, no new change there. That's a long opportunity. Australian dollar, not as excited to be short that anymore. Even though I think the dollar is going to go higher, the Australian dollar is really not too much of a relevance there. We're going to hit the NASDAQ really quick just to give some numbers. Don't get glued into this too hard. Here's a weekly, just like the S&Ps, not a lot of new information there. NASDAQ, again, just like the S&Ps, coming up into a little bit of a target-rich environment here on the long side. That particular top, 4660. Right now we're trading 4661, so may have a little bit of a consolidation here, or a little bit of a back off, but nothing to really scare anybody. That's the numbers on the NASDAQ. The DAX, a little bit stronger on a relative strength basis. That big number on the DAX for support, 10,891. As we look at this, and we keep going down the usual suspects, we're going to take a look at China really, really quick. Now, China, you know, if you look at the weekly, we talked about this support 3312 to move higher. That's still the case. And we've cleared all the congestion on the daily even earlier than that. Do you take this trade off? Do you think China's going to back off right now? There's not a lot of indications. You know, you got some big support, 3450 and the 35 in that general area. Stops below there. And any breaks below there could cause some technical damage, which would also affect the U.S. stock market a little. God knows what will affect it, but that's one of the things. Here we go. So the 10-year. Interesting situation on the 10-year. New profile appearing above price action. That may act as a magnet. 126.17 may be resistance on that, but any breaks above there, we're going to probably see that 127.13.19 general area. So what does that mean? That means that as we look at this and we look at the weekly, we talked about waiting for new inflection points to appear on the treasuries to even get a hint of starting to trade them again. This is bearish in general, folks, period. So, as we look at this, we're not going to get any, inkling of wanting to be long this until we have a daily close above 126.17.18 at the very least. All right. So, am I a big fan of shorting this down here? Not really. But the technical damage is there on the 10-year. Any hints at the economy and any comments from Yellen that's, there's somewhat of a mixed bag, but I think they're more than likely going to raise quarter point. We talked about that. These treasuries probably already have that factored in. So, be any guys who are short out there, be kind of in a wary environment and be leery of this thing doing a little bit of a pop. And that 126.17.18 is that big inflection point you got to pay attention to on that type of situation. All right, hitting gold. Yeah, this is even though we've had a couple little pops here, this is not good. And by the way, gold has got a new profile that's appeared down here too. 1090, 1091. You've got that 1086, 87 area on the weekly, and this, as you can see, is kind of spinning down here. This is a classical continuation pattern, and a high, it's very high probability that thing is at this stage is going to start breaking 1086, 87. And any closes below there are going to be very, very damning for a new leg down on gold. When you see gold, or any instrument for that matter, go down and find these inflection points down here. You want to see it get away from these inflection points, and in this case, rally, and that's not happening. This is just consolidating and building cause, as Tom would say. So, not a good situation for gold. Crude oil. Crude oil, dollar, kind of related right now. Big support, 43, that general area. We're going to talk about this a little bit more when we come back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at crude oil. Just want to give some numbers here. 43, that general area is big support. 42.76 and 43.11. Those are numbers that, if we go into our scanner, we go into the futures section. This is, where are we at? There we go. 42.76, 43.11. There's the real time. By the way, pre-market prices are going to populate these cells on the daily and weekly 240-60. Excuse me, starting tomorrow. We're going to take a look at the XLF really quick. And we're going to hit KBR and KRE. These are some bank stocks or bank ETFs. I talked about around 24, the big support area. We talked about the spreads. The banks will more than likely just love it with the chance of any rate increases. Here's the situation. New numbers here on the XLF support now. Intermediate 24.23 had a decent little move up yesterday. As you can see, relative strength-wise, market shows some strength. These things pop. Got a little bit of resistance to go through right now, 24.60, but put a gun to my head. I think this particular ETF is going to go higher. And I think the market's going to edge up a little bit here, which is not going to be the worst thing in the world for the XLF. KBE. Well, not making new highs, which is okay. Showing a lot of relative strength, just basically looking exactly like the market, but actually a little bit more relatively strong. Nothing to hang on to up here on the daily. Obviously, above profiles there. So, what do you do with this? Letting these lower time frames regulate the trade up. You've got some targets at 37.28 on the long term, but I'm not a big fan of shorting this, just like I'm not a big fan of shorting financials or the XLF right now. Comments from the Fed could change all that, but I think they're just going to kind of outperform the market, as the market may edge up higher here. And when I say the market, above 2104. Let's take a look at KRE. It's another kind of regional banking. You know, a little bit more even outperforming the ETF we just looked at and the XLF. As we look at this one on the daily, you know, it's a very similar situation as we just looked at for KBE. 240s regulating the trade up. Don't see any reasons to take this trade off. Big time support on its 44.26 on KRE. Let's hit silver really quick just to get that out of the way, and then we're going to move on. As we've talked about, silver's been the relative strength or the relative weakness trade against gold. We talked about this, a number down here possibly to play around with, 1445, trading a little bit below there now. If we get a weekly close below there, it's going to be kind of but not good, technically speaking. And here's silver. You know, don't think that there's you have to take the attitude that there's no end in sight when stuff like this starts happening, and you've got a dollar situation that just mathematically may continue to allow this thing to slide. It's not on sale. If you want to own silver, obviously you had a pullback here, but again, I think we could head lower and you could get a little cheaper, bare minimum. Let's take a look at the technology sector, XLK, on the big ETF there. Again, this is something just kind of probably going to spin around up here. I would ignore that inflection point, use it as support, and stops below as soon as we start getting some momentum here. If that's going to be the case, again, we're above profiles here. No new information. Not a big fan of shorting the market right now. I'm a buy the dipper right now. And maybe in the near future, I'll take a different attitude. But right now, this particular scene on the long term, and again, we've got a mixed bag here, so you're going to be a little non-directional for a while. I'm still kind of hanging my hat on this long-term breadth situation. We haven't turned yet, and there's no reason to look at a broad market turn until that starts showing some hints. We have had some short-term opportunities, obviously, on the short side, but a little non-directional right now. And we're classically right in the middle of a profile here on their intermediate, so that's kind of jiving with that concept. We will be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
You know, somebody asked the other day, I forgot to follow up on this, asked me about the Spider SPY being in the scanner. And I think we'll put it in there if it's not in there now. But one of the things, that the reason we look at the futures is because, it basically trades 24 hours a day, and you get to analyze a lot more activity, pre and post market relative to the spiders. And when I say that, analyze more activity, that allows for more information to be built into these profiles or these fair auctions. And the way this calculates, and we're going to get into this a little bit in the webinar tomorrow night, for the scanner's sake, and building these, so-called signals or indications, it allows for that volume analysis and the price action to be incorporated into this. And 15 years ago, it was a little bit different story. I mean, the pre-market and post-market activity relative to the spiders, when it involves the futures, you could actually get, some invalid moves pre and post-market. But I really feel like you have to kind of incorporate all that because, the global marketplace now, and people trading at night in Asia and, whatever in Europe, then soon to be Africa probably, you have to pay attention to that market activity. Even when the U.S. stock market's not open, which has got that arbitrage effect with the futures. And if you don't know what I'm talking about, the 500 stocks comprising the S&P 500 in baskets, have to stay in some kind of. That's a trade in itself, but it's a very skinny trade now. It's very, very efficient relative to the electronics of what the S&P cash is doing and the instruments in the S&P relative to what the futures are doing. And if you want to look into that a little deeper, you can go into a couple of websites and look at the carrying charges for the futures. Why are they less than the cash price of the S&Ps? Sometimes why are they more? You can look at that equation and get a little deeper into that. But this is an arbitrageable event for sure. And sometimes, like you got the Apples of the world, which are overweighted. I mean, you can set up your own in an Excel spreadsheet, really. And this might be an interesting endeavor for folks out there listening. Go find the most heavily weighted stocks in the S&P or the Dow, or excuse me, maybe the NASDAQ. The Dow is such a small sample. It's kind of something I don't even follow. But set up the heavyweights who are in the S&P, the Apples, the Exxon Mobils, the Visas, Procter & Gamble, I believe is way up there. Maybe set up a basket of the highest weighted stocks in the S&P. Just pick 10 of them, and kind of look at that, how that value may lead the S&P up or lead the S&P down. A lot of times, in the old days, you could look at IBM and what IBM was doing. You could pretty much get a somewhat of a leading indicator on the S&Ps and look at support and resistance levels for IBM and kind of, be able to ignore things on the S&Ps when it comes to support and resistance levels and just get a biased opinion of what's going on. It's an interesting endeavor. There's actually a really cool website called indexarb.com that a friend of mine runs. It looks like not a first grader did it, but it's just kind of bare bones minimum of some, math calculations that are going on, weightings, fair value calculations, changes in. It's a nice little quant website, and I think he actually sells subscriptions to some of the more intricate values that he's outputting when it comes to some of that information. So let's take a look at Apple while we're talking about it. Obviously, not a good day yesterday afternoon. And we talked about this support area around 117.92. Got a couple of emails going, hey, what the heck happened here? Well, when we have a support level and it's breached, what we have to do based on our appetite for risk, we have to kind of call it quits. But the long term, this is a very wide profile on Apple. And what does that mean for Apple in general? That means that we're going to have unusual volatility, and this profile is 128 down to 104. That is a massive span. But remember, this is going to have, some non-directional movements within. This is what we call the fair auction for this. And what we were talking about yesterday is still the 117.92, 118 general area would be a chance to try to pick a battle on the long side, as we felt the market had some biased opinion towards the north side. Right now, Apple can go lower. It's trading 116.39 right now. Be aware that will be the kind of the Maginot line to get back above on Apple to start looking at it from the long side. Otherwise, you got another support area around 112.49. And why is that the case? That's because we got a POC down here that we kind of rolled around for a while and finally broke above. But that's going to be this next support area on Apple. And we've got to pay attention to the broad market. Got to pay attention to the broad market as it relates to, kind of rising tides lifts all boats, or the opposite of that. So let's take a look at Goldman Sachs really quick. Come on, charts. 193.36. We talked about this big support area the other day. That's still the case. Stops down below. I'm a big fan of the financials hanging in there. Let's take a look at McDonald's. We're just going to run through some Dow stocks here that I got a couple of emails on. Volatile day without question. Long term, still up in the stratosphere, 113.22. Not to be a Monday morning quarterback, but what do you do now? This is the daily. I don't see a lot. We talked about 109.21 being huge support for this. We've got kind of top of the box at 112.77. What do you do with McDonald's? I don't think you have any reasons to take the long off on this at all, even though we had a little volatility here. Remember, stops can be placed below 109.21 on the long term. This fair auction is still going to be a continuation pattern, even if it's in here. And one of the cool things in the scanner, we're kind of getting prepared for tomorrow's webinar and the finality of this thing, because it's been in flux for a while, just continuing to have features. These numbers in the gray box we're going to explain fully, but these are kind of continuation patterns, and we're going to, before tomorrow night, place an arrow up or down, so you'll get an indication, even if we are in a balanced area, what's the latest trend of the marketplace, and that'll be pretty definitive. And if we're looking at the McDonald's of the world or the Apples of the world, we're still going to be looking at an arrow up in those gray cells. Trying to give you more information. Let's take a look at Johnson & Johnson. Man, I need to reboot eSignal here. This is a interesting situation. This is a weekly chart. This is the 101 area, top of the box. I'm going to pull up our scanner here, and I'm going to go into Johnson & Johnson. Let me find it here. J&J. There it is. As you can see, there's that 101 up there, and we're sitting, and we've almost come back down into, let me just pull this up here really quick. Yesterday we came down and found that 170 area, and we've hit that for 2 days and come off of it. I love the way this is acting, guys. And the reason I pulled it up is because we're in the balanced area of a new profile. You can orient stops relatively tight on this below that 100 to 170 area. Get stopped out if you need to, but be able to look at that as kind of getting back in the game if we happen to go back up into that area. And I'm actually looking at 102.49 and even higher on this. I think the market's going to, maybe not today, but eventually drag everything up. And Johnson & Johnson, you could have some, 108 potential in this thing. PFE, Pfizer. Healthcare, again, is going to more than likely have some issues here. I tell you what, I don't know if you guys have called the Obama, have you called Obamacare, the healthcare.org? I'd love for you guys to call in and let's talk about that. I'll tell you my experience. I'd love to hear somebody else's. On the long term, Pfizer found support when we had those big pullbacks and showed some relative strength there. I got an email about this, about what to do. We're right in the middle of a fair auction here. I think that obviously the market's going to drag some things up. The good news is you can place some stops below 33.21 on Pfizer based on your appetite for risk. UNH. Okay, so healthcare. This is a big stock in the ETF here that we look at on the XLV. 113.73 is huge support on this particular stop. The good news is that we pull back into that. You can place stops below on UNH. Am I a big fan of healthcare right now? Not exactly. But we do have a strong stock that, and let me pull this up in the scanner too. There it is. This is a continuation pattern 13. We're going to have the arrows in there. You obviously have the breakdown, but you also have a new box attempting to appear on United Healthcare on the daily. So that means we're going to have even more support on this stock. And in my opinion, Orient stops below 113.73 is not a bad idea. We've been in consolidation for a while on this. It hasn't outperformed the market lately, but on the whole, we're trending up. And, taking a shot and being able to possibly trade this thing back up into 123, maybe 120 into 123 may not be a bad proposition. And what does that mean percentage-wise? That's about a 7% move. I'll take it. With a risk reward that's relatively high, placing stops below 113.73. Pre-market, God, man, oh my God, we're actually up a little bit, 116. Okay, I thought that was a little bit bigger spike than that. Let's take a look at IBB, Terry, since you're talking about that in the den. Here's the situation. 326.04 is big support. I think we've added this. Yeah, there it is. Okay, so we've actually put that. There's not a lot of places to put other stocks, unquote. So I think we put this in the S&P 500 section, but not calculating it in the breadth. So these are just extra, this is a ETF, obviously. But there's that 326.05 sitting there. We've been above that 2 bars. The continuation is 7. So, and let me point that out to you. So as we broke above and we're coming back in and we're finding support on this and we're above weekly profiles, you got 338.90 as resistance on this. I wouldn't look at that as a shorting opportunity relative to the long-term situation here and kind of breaking stride and getting above profiles. Larry, Terry, I don't exactly know you might have a question on this, but I see support at 326.04 right now, and I see the market dragging some things up. So that biotech ETF is, I'm not a huge fan of the envelopes of that sector, but you got to take this as kind of we're back in business on the long side, actually, if that makes sense. Daily and weekly kind of confirming that. Okay, we're going to hit IBM. You watch this, so you know this is something I've just been beating the desk about staying short on this. No reason to take it off. Some people are like, is it gone low enough? Is IBM gone low enough to buy and put into my portfolio? There's like 0 reasons down here to start even nibbling on this. No new profiles attempting to appear, not acting very well as the market goes up. That's another sign. You want to find stocks that are showing their hand, not cooperating with any bounces, and selling off pretty well when the market comes back. See how this is a great relative strength or relative weakness example of this. Market comes down, this thing falls to hell in a handbasket. We're going to be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Thanks for coming back, guys. I got Alibaba up really quick. Had an email about this. About is it time to start taking profits on it? My answer is yes. I know all the news is out there. They're breaking records and all that kind of crap. 82.64. We traveled the entire fair auction on the weekly. This is the daily. We've had the kind of indication the other day with the orange bar and the new box. I mean, this is still a little bit of a supportive mechanism here for this to possibly move higher. But sometimes you got to sell the news. And I know the market, in my opinion, I've been talking about this, the bias is to possibly go up. But this is a target-rich environment when something like this happens. You got the news, you got the top of the profile. Can it spin around here? The more it kind of stays around this unfair high on the weekly, the less and less I'm going to feel confident that this is at least an intermediate top. Then you got to start looking at this as a breakout situation again. But anything can happen. The market can pull back. You can drag a lot of these things down with it. So right now, boom, targets have been met. The answer is we're going to have to wait and see. If we start spinning around up here and don't pull back, then you're going to have to look at buying breakouts on this again. And breakouts, where are they clarified at? Literally breaking the most recent unfair highs, the most recent highs for getting the profile. So that's the answer there. I'd be out of this right now. Put a gun to my head. See if we can get this back to where it was. And that's terrible. Just ruined our screen. Let me drag this over. There we go. I'm going to hire somebody to move my mouse now. All right. So looking at let's see, here we go. Okay. So taking a look at a couple other stocks. Let's take a look at Chevron. And we're going to kind of reference the scanner here. We're going to reset that, clear, reset. We're going to go back to our ETFs. And we're going to look at our daily here. And we're going to look at the XLE. And we're going to look at our 4-hour. We're going to look at our daily here. We're going to go into the XLE. Just going to kind of cruise through this. Crude oil is obviously looking a little weak, and dollars, kind of helping that situation. Yeah, Marshall, we're going to take a look at the euro real quick. CVX, again, big support at 90.55 on this. You kind of want to hope that we have a pullback into that area. That's going to be the kind of the opportunity situation. But remember, if crude oil starts breaking below 43 and a weekly close below 43, you got to pass on a lot of this. Okay, you want to see crude oil start getting some legs again. Taking a look at the euro. Marshall, we talked about this earlier, but I'll just do a quick review because I love this trade. 109 was that big weekly close. We could have a retracement back up into there. Be prepared for it. Doesn't have to make sense and just stay down and continue to go lower. I think the dollar's moving past 128.29. That's going to help this continue to go lower. But right now, you got big time resistance at 109, 109 and a half. Short-term numbers, what do you do with it now? This is the short-term 240, which I pay attention to. We caught that resistance. This is all offered in the scanner, by the way. And we've met some short-term targets. I'm not a big fan of going long at any of these inflection points. So right now, it's kind of a wait for a breakdown below 107.05 to sell those breakdowns. Thanks, guys. Larry's next. Stay tuned. Make sure you sign up for the webinar tomorrow night, 6 p.m. Going to cover quite a bit with this scanner. I know you'll enjoy it. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.